Hey, what's going on, my friends? It's been a while. But we are staying busy over here. I'm grinding as usual. So I apologize for not, getting back into the swing of things as much as I would like. But we're getting our weekly dividend portfolio updated video in on this Monday instead of the weekend. And as you can see right now, over the past day or since Friday, whatnot, things are down. We're down about 0.6%, basically even. Can't complain there. But when we jump out to the past week, you can see we are up about 0.14%. The past month, we are up 2.48%. The past quarter, excuse me, we're up 4.71%. And then the past year, all time, we're up 15.86%. So the reason you want to consider having a dividend portfolio is because when you have that money just sitting inside of a savings account, it is not working for you. As you can see, we're getting 15.86% return, which is much higher than what you would get from a savings account or a checking account. Um, of course, there's volatility. It's not guaranteed that you're getting this 15%. It will fluctuate. It will go up a bit. It will go down a bit. Right now, things are going pretty well. We're on the upper end of how things could be going. And one of the things I want to throw out there is having a dividend portfolio, I believe, is, I don't want to say it's recession proof because your stocks, the value, the share prices will obviously be affected, and potentially the dividends could be cut. But as a whole, when you have strong, stable companies that have been around for years and years and years before you might have been born, and has been giving dividends this whole time, well, that usually is a good selling point. It's a strong suit that will allow you to feel comfortable that this is a company that you can have in your portfolio. However, that said, if we scroll down and take a look at our portfolio and see who's doing well, who's not doing so hot. Of course, we have sorry about the traffic outside. It's the morning. Um, we can see, similar to what we had seen last week, we got the beverage company, got Pepsi and Coca-Cola up there. And then, of course, we have our REITs in there as well, Newt and Realty Income Corp. But at the bottom is AT&T, and everyone pretty much knows who AT&T is. Everyone's familiar with them. However, they have a dividend cut that they're reducing their dividends, despite being someone who's been around for years and years and years. Um, they are reducing their dividends, and for that reason, we are going to consider swapping them out, getting rid of them, and adding someone else in here who we can feel more confident about. The real goal is, or the thing that you have to really consider and think about is, what exactly are you trying to do with your dividend portfolio? That's really what it comes down to. Some people don't believe a dividend portfolio is the best investment because your returns aren't as high as they could be if you went the growth route. Others say, hey, if we hit a recession, this at least we're still going to be seeing income, that passive income, meaning it's working for you and you got your money there, so they're going to give you your dividends. And it's kind of that safety net there where you'll still be getting some sort of income. Of course, not much when you don't have much inside of your portfolio. So the more money you have, the more you'll be getting back. This is not the approach that you take to getting rich quick. If that's your mission, if that's your goal, this is not for you. But if you are someone who's trying to just start to budget, you're trying to start saving, you're trying to start investing, I don't think this is a bad route, a bad option, a bad way to go, because these are sound, good, stable companies that should be around for years and years and years to come, and likely, aside from AT&T in this list, won't reduce their dividends, potentially increasing them year over year is the goal, and that's what you want to see. Not guaranteed, but again, the ideal approach or scenario is they are not reducing their dividends. Um, so, like I said, a lot of it comes down to determining what exactly are you trying to do? What exactly do you want your dividend portfolio to do? Because if you are just focused on getting the most amount of money as quickly as possible, well, going this route might not make the most sense. I have other portfolios, I have other investments where I'm seeing larger amount of returns than this 15% that we have here. However, I don't get the monthly dividends or quarterly dividends that I have here. And you also have more volatility and just seeing how things fluctuate, much more drastically. Um, than what you see here. So there are different approaches you can take to investing, that you can take to building your wealth. This is one approach. I don't believe there's a correct way you have to do things. I'm seeing some YouTubers on here starting to. There's this one YouTuber who just loves to bash any kind of dividends investing, and he basically bashes anyone who doesn't do things that isn't done his way. And he's people, they're eating up his rubbish, unfortunately putting themselves in a situation where they essentially are putting all their eggs in one basket. And that's where I think, I'm a business owner, I have a business, right? I'm not saying you should only invest in the stock market. I believe you should invest in yourself. You should invest in the stock market. You should invest in others, because these are companies that have done, they are successful companies. They've proven themselves, and they have a following. They have products. They have, people on board with them. And so, similar to some of these gurus and experts who are saying don't invest and you only need to, only start a business. Let's be honest, the number of businesses who fail in this country is incredibly high every year. The likelihood that a business will succeed and last beyond 5 years is pretty low. So when you can put your money behind a company that has already proven itself, yes, you're not getting as much back because you're not giving them, the world. You're not giving them your all like you would with your own company, right? You're getting just a percentage, a portion of the investment that you have made with them. Um, and so it's a trade-off, right? It's a trade-off, but I don't believe there's one correct way. I don't think there's anything wrong. I see some people being, some other YouTubers are saying they're, no more dividend investing and I'm quitting. And I'm not going to jump ship on dividend investing with this portfolio because I think, like I said, all of these are good companies. Some of these companies would be in other portfolios that if you weren't even focused on dividend investments, they would be there. And that's what I believe you kind of want to focus on. If you see an opportunity where there's growth opportunity as well as the dividends, that's a great scenario because you're like, hey, that company, yeah, they're focused on giving out dividends, so they're not reinvesting as much. However, the company still has a lot of potential to grow and expand. And over the years to come, even if they just continue to focus on what they're doing and, giving out dividends, their stock prices might still go up drastically in another 5-10 years from now. So I believe, you want to be diversified. And I think having some sort of dividends, having this dividend portfolio is nice. I'm building it up. It's a process. It's a grind. And you guys can see anyone can start investing. If you have $5, $10, $15, this is a $25 a week portfolio. And there's no excuses. If you're watching this video, well, watch this channel, subscribe to the channel, watch some of the other videos so you can figure out some additional ways to make money or increase your income stream. That way, you now have money that you can allocate towards your dividend or some sort of portfolio, some sort of investment portfolio to get your money to work for you, because that's what it's all about, getting your money to grow for you. So yeah, I'm not gonna bash anyone else and say, all these people are wrong and I'm right. And no, that's not me. There's plenty of channels like that on YouTube for that stuff. But I will say you can start to invest, you can start to build your wealth, you can start to plant the seeds, water those seeds, and get that money tree to grow for you so that it can start to work for you. But on that note, you guys can see we're gonna just look at the stocks we have right now, see how everyone's doing, and we're gonna kick things off with Newt, who's at the top, where you can see 67%, followed by Pepsi at 23%, Realty Income at 22%, Coca-Cola at 18%, Johnson & Johnson at 12%, Procter & Gamble at 11%, 3M at 11%. Then it falls down a little bit to JP Morgan at 2.85%, Verizon at 2.35%, and at the bottom, At&T at 2.21. That's negative 2.21%. So this is the beauty of this portfolio. We can easily swap out a company that we see is making changes that we don't agree with. And it's not that complicated to do. So if a company starts doing bad, if they start cutting their dividends, fine, swap them out. Do a little research and find who you want to replace them with, or consider just dimmying up and distributing the portion that you have with that company among the other companies that are already in your portfolio. But when some people are like, oh, and then if a company cuts its dividends, it's not like that's the end of the world. You just get another company in there and you keep it moving. Not a big deal. So when you got these naysayers saying dividend portfolios are horrible, no. I say it's rubbish. I say there might be more opportunity to grow your money more quickly with growth companies and other companies. But again, if there is a recession, a lot of those other companies are going to be heavily hit. And if this is your like hard-earned, savings, your money, I mean, you want to have your emergency savings in place. But beyond that, if this is, you're trying to save for a car in 5 years from now, something else, or something in 10 years, a house, whatever it might be, when you're going that growth route, it's not guaranteed that it's going to continue to go up, and of course, we're not guaranteed we're going to get dividends. They can reduce them and cut it, so similar, you can just swap out companies. But my point is, even if there is a recession, oftentimes a lot of the good, if you have good, stable companies, they will withstand it and continue to give you dividends at the same rate, where you'll still be getting paid, just, regardless of what the actual stock price is. That is one of the best selling points to why you want to have a dividend portfolio. So I have a few links down below if you guys are interested in starting your own dividend portfolio with Webull or M1 Finance. I do have links down below where you guys can sign up with them. Using my links, you can get, I think it's like $50 for free when you start and fund your account with M1 Finance. And if you start and fund an account with Webull, I believe you get 2 or 3 stocks, free stocks as well. So not too bad, a great way to help get the ball rolling, get you in the right direction, but you have to start. Click those links, sign up, add $20, add $25, and have it do it automatically on your own. Auto invest your any balance you have in here and stuff. I think it does it at $20 or $5 or something on its own. $25, yeah. So yeah, I think you guys need to just get the ball rolling. Too many people are intimidated. Too many people still haven't started investing when they should. And the sooner you can do it, the better, because that compound interest is huge. I'm trying to get my nephew to understand this. He says he does, but he doesn't because he ain't doing it. So, it's one of those things where, it takes actions, it takes repetition, and just doing it. Sign up, get the ball rolling, set it in auto pay. You don't have to do anything at that point aside from make sure you have money in your bank account. After that, this will take care of itself. Of course, you want to check on your companies in your portfolio every once in a while. Make sure they are doing well. Make sure you're up to date on if they do have plans to make changes coming, like At&T. And beyond that, you should be good to go. Of course, this ain't financial advice. This is entertainment, educational content. And I just want to help spark that fire to get you guys rolling in the right direction as you continue to move forward in your financial independence journey as you strive for financial freedom. And on that note, I gotta keep it moving, my friends. But let me know what you guys think. Comment down below with your thoughts. Should I change out At&T because of that dividend cut that's coming? Who should I replace them with? Do we want to get an ETF that maybe we'll look over a number of different companies but give out dividends, or continue to rock with the single companies like we're doing now? Let me know. Comment down below. What are your thoughts? What are your suggestions? Have you started your dividend portfolio yet? If not, why not? All right, my friends. Now, you already know I got to keep it moving, but I'll see you in the next video. Peace.